Well, as financial regulation picks up steam on Capitol Hill, no doubt big bank profits will be impacted. Dick Bove of Rockdale Security says big banks actually are your best bet. Really? He joins us to talk about it now. I mean, you talked about this in your recent note, and you seem really bullish on the big banks right now. Why is that?
Well, it sounds confusing, but because the bill it's about to come out of conference committee will take about 25% off the profits of the banking industry.
About $68 billion.
That's correct. So the real opportunity in these stocks exists because the $250 billion in loan losses that they have are expected to come down to about $30 billion over the next 4 or 5 years. So there's about $200 billion in pre-tax profits which will come to the industry simply because the loan losses will go away. I think that it's fair to state that they will grow at least 200% to 300% in price over the next 5 years.
Really?
Given what should be this big increase in earnings that we're looking for.
So is this simply a matter of an improving global and domestic economy, that the loan losses are going to come way down?
That's exactly right. That's the key. In other words, if you plot bank stock prices going back over, I don't know, a 10 or a 20-year period, what you find is that when non-performing assets or bad loans increase, the bank stocks come down in price, and of course, when bad loans start to come down, bank stocks go up in price. Well, bad loans are starting to come down. The economy is starting to show signs of continued improvement, and that means the loan losses will come down to a very low level, and that's what will drive earnings, and that's what will drive the stock prices.
One of the other things that you talked about in your recent note was what you view as sort of a limited impact of the European debt crisis and global political instability on these banks. I was on the floor of the New York Stock Exchange yesterday, and that's sort of the opposite of what a lot of these traders were telling me, saying, look, we have to pay very close attention to what's happening in Greece and Spain and Portugal and Europe right now. Why do you disagree?
Well, I agree with them that it's going to have a significant impact in Europe, all right? In other words, I'm convinced that these countries simply don't have the money to pay back their debts. So I think that a large number of these countries will in fact default. So the question is not whether they're going to default. The question is how bad is the impact going to be felt in the United States?
Right.
And I don't think it's going to be that great. I think that the GDP will be impacted by 0.5% negatively. But there are only 5 banks in the United States that have major exposures to Europe. And of those 5 banks, really only one, J.P. Morgan, has got real risk in terms of defaults in that area.
Are there banks, Dick, that you think will benefit from financial regulatory reform, which in some way, shape, or form looks like it'll make it through conference committee and make it to the president's desk?
Yeah, I think by July 4th the bill will be signed. But yes, there are the banks that are not being affected, right? In other words, if you take a look at this bill, and everybody talks about the different amendments and where the problems are going to be created, so the best place to look is where is the no impact? In other words, who is going to be left alone by this bill? And the answer to that is banks who are commercial lenders. In other words, if their primary business is making loans to businesses, not only are they not going to be negatively impacted, but they're going to get positively impacted because, first off, there are a number of job programs which are now coming down the line, which means tax benefits, which means, benefits, for depreciation expenditures. And therefore, companies like BB&T, PNC, Fifth Third, Comerica, U.S. Bancorp, all of those banks should benefit by what's going to happen, whereas the vast majority of other banks will not.
What about looking at the many allegations and investigations into this so-called double dealing, if you will, of a number of the biggest banks in this country? Goldman Sachs is the only one that has SEC fraud charges against it, but looking at the broader array of banks right now and the argument that they can't be on both sides of the trade, whether that's morally wrong or illegal is the big question, but what banks do you see most potentially affected by this right now?
Well, ethically and morally, I can't defend any of these banks that sell products that they don't think are any good, all right? That doesn't make sense from an ethical standpoint. From a legal standpoint, however, I don't think any of these banks have done anything which is illegal. What is now being requested is that the seller of these securities take some position relative to their quality. That's not a legal requirement. It might become one, but it is not at the moment. So even though J.P. Morgan, Morgan Stanley, Goldman Sachs, Bank of America, and perhaps to a lesser degree Wells Fargo, would be impacted by this, I don't think that there's a legal issue here that the industry is going to lose.
Appreciate the insight, Dick. Thanks a lot.
Thank you.
Thank you.
Always nice to talk to you.